place I've ever been.
Hello guys, welcome back to another lovely trading video. In this one we're going to be going over Bullish Pennant and how you can use them when trading, types of entry and where you can place stop losses. So I don't currently use bearish pennant, even though you can. It's the same criteria, just the inverse of it. But I trade standard deviation on shorting momentum stocks. So I use this as a way to be long bias, and I'm going to try and use it more and more, especially in this slow market, because there's not as many standard deviation trades, so I'll be able to use this on the side. So currently we're on a trade I did on March 11th, and to see if you can already see it. If so, great. If not, I'll go over it now. So firstly, you need this thing called a pole, and that's like a amount of momentum that is considered a lot. In just kind of like an upward momentum. So here we went up around 31% in around 10 minutes. In around 40 minutes. I'm on the 5-day 5 minute. So yeah, in around 40 minutes we went up 30%. So this is considered my pole. Then what you need to look for is the high and then a lower high. So here we have a high and our lower high, which looks good to place there. Then what you want is from our original high, you wait for a low, you wait for that second high or second higher low, or lower high, sorry, and then you wait for that pullback, and that would be then our pennant from the pullback. Though you want higher as a lower high than the original pullback, so you can see it went high and pulled back. So this is what you would call a bullish pennant pole, the lower high and a higher low. So now you can trade this in around 3 ways. So firstly, you can trade as it pulls back here, and you don't really know where it's going to reverse, so you kind of have to take that on judgment, and then you can have a relatively tight stop. So if you enter, let's say you come entering your 20 EMA, you think that's going to be a good entry, well then you enter at around 550, and you can have a stop around 525, so you can have around a 25-cent stop, and then you have a lot of upward potential. So yes, you won't be as accurate, but you will have a big risk to reward. Secondly, you could trade the actual breakout, so you could maybe enter once it's broken out of this band, so maybe at 580, 585, once the momentum kicks in. So you could always trade it like that, and then this is more up to you. I don't personally trade like this, I'm not the best at giving stop advice, but maybe you could have your stop at the low, the previous low. So if you're doing that, you have around a 40-cent stop, depending where you enter. And then yeah, you could have a 1-to-1 risk ratio on this one, or something like that, or 2-to-1 or 1.5 to 1. And then the last way you can enter, and it's how I actually prefer, is waiting for the retrace. So we had this breakout, we pulled back, and as you can see here, we pulled back into the 20 EMA, the VWAP, and also our line all at one place. This shows us that it's most likely going to reverse, carry on its trend here. And so this is where I would personally enter. So for this, I will go into draw mode, and this is also the same as an ABCD pattern. So why is this not letting me draw? There we go. So again, you look for the pole, which is here. You then look for your first original high, which is considered A. You wait for the pullback for here. This is considered B. And you wait for a move up, and you wait for a new a higher low, which is here. This is considered C. Then you wait for the breakout, and this is considered D. So I hope that makes sense. And again, you can look to enter it different ways. So entry number 1 could be around here, but obviously you will have more a lower accuracy, because a lot of the time it may not end up being a pennant and could just push further down and never try that high. So that could always happen, but again, you have a tight stop if you do that. Secondly, you could enter here, maybe at the break of the original or a high before, because if it breaks through here, it is pushing into a high, and you could consider that bullish or a reversal change. So again, you could enter here around 580 and then have your stop maybe here. So that is a lot more risk than if you were to enter here and have your stop here. So that's what I mean. This was lower accuracy but a tighter stop, higher accuracy and bigger stop. So again, this is up to you, and again you could always enter here. So here, here, here. Personally, I would probably be entering on the 20 EMA, so I would be entering this trade around here, and then I would be having a stop also of around this low. So again, if you trade the retrace, it's less risk than this trade. As you can see, we're entering around here, so it's a lower entry, meaning our risk isn't as high because we'll have this roughly the same stop. However, we do take on more risk than if we were to enter on this pullback, but our accuracy will be higher because of that. So this is kind of the middle ground to trade the retrace, and you do also have to use some other trading knowledge when trading these retraces, because if it looks weak, maybe if you you can just kind of see it. If it looks weak or some news has come out, then you may not trade that retrace, but a lot of the times it does work, and that's what I personally prefer. So again, one last time, you look for a pole which is considered here. So I'll label it here so you can screenshot it if you want. You then get this pullback, and and this is considered A. You then get this pullback, and this will be your low, and you consider this B. You wait for that new high. That's where you then draw your pennant line. You then wait for a lower high, a higher low, and you consider that C. And then you wait for that breakthrough, which is here, and you consider this D. Again, you can enter here, here, or here, wherever you want, and most typically you'll have your stop here. Unless you entered here, then your stop will probably be there. So I hope that's clear. We'll go through one more example, and then that should be enough. Oh yeah, sorry, before we go on to the next one, also you would notice I did this on the 5-day 5-minute. You can do this on any time frame. I personally prefer the 5-day 5-minute, for the reason being, two sets of traders will see this. So people trading the 5-day 5-minute will see that quite clearly, and again, if you go onto the 1-day 1-minute, this same pattern will be visible. So you can see here we got that pullback, and again, so it's clear on both of them. That's why I don't personally like trading this kind of strategy off the 1-day 1-minute, because if it only shows on the 1-day 1-minute, it may not show on the 5-day 5-minute, and so just less traders are actively looking for it. And I just see that trading on the 5-day 5-minute has a higher accuracy, but again, you can use it on the 1-day 1-minute or whatever time frame you want to. So we'll go on to another example. So here's another example. This one is one that would have failed depending how you do your entry. So if you were to enter, so you would draw your pennant there, you kind of got the lower high there, and you continuously get the higher high here, but this was our pullback. So here, if you traded the lowest risk entry with the lower accuracy one, you would see, let me get my drawing tool out, you would see we get our pole, we have A, we have B, we push higher, we pull back, so then we have our C, and in this way, remember, if you get the early entry, you would enter around this one here on your probably 20 EMA, however, your stop would be here, and it never did follow through. So here it would have been a losing trade, but you would have only got in this trade if you trade the lower accuracy, lower risk. But yeah, so, and again, if you trade where you get the if you trade the breakout or the retest, here we never retested it, so we would have never seen that trade. And if we go into the 1-day 1-minute, let's see what it looks like on here. As it might have been even cleaner. Yep, on the 1-day 1-minute, it's the same kind of thing. Again, people may have traded it if you got the early entry here, but it did end up failing. So that's just a thing to look out for. This is a failing trade if you take that early entry. So now we're on March 15th and we're looking at ocg. If you want to go back and test it yourself, you can see we're on the 5-day 5-minute as always. You can see we had our nice push, and again this is our pole. This would be our A. We wait for that pullback. This is our B. It then retraces up. We wait for that pullback. This is considered C. Then we get our breakout. We need to switch back to the mouse for this, and we can actually clear that. And again, we'll draw these in. I should have done that first. So we draw this, and we draw this. However, you may see in this one, and this is why I'm going through different examples here. So you got A, B, C, D. Pole. Just so it gets stuck into your head here. If you trade the breakout, you would have got a nice entry around this area, or maybe this area, depending where it is. Again, your stop would maybe be around here, or this consolidation area here. And again, if you trade the pullback bit, like the original low risk, low accuracy entry, you would get in here. However, if you trade how I do and wait for that retest, you never get it. It never made it to there, so this wouldn't have been a trade. So this is why it matters depending on your entry type, because sometimes there's trade, sometimes there isn't, and it's always different. So in this case, depending how you would have taken this entry, you would have got it, just depending on your entry style. So we'll go through one more, which maybe has them all. So here we are on GIGM on March 24th, and here we have another example. So here you can either go, it doesn't matter too much, you can either go from that high or that high, they're roughly the same. So that's more up to you, and preference, it's not the end of the world. And as you can see here, our low and our lows, still a pennant, and again you got your pole here. And again you can do it from either one. We'll go from that one because it does say the high. And we will do that. So that's roughly how I would have drawn it in a live market. And again, here you get your, we'll draw again, pole, A, B. Don't name that anything, you wait for that pullback. Roughly this area here is a C. And then you kind of get this breakout now here, all this way up here, and this is considered D. Again here, if you trade, you get the early entry, or you trade the breakout, you would have got an entry, it would have been a win. If you wait for the retrace, there was no entry, unless you enter on your like support line, which I personally don't really do, but again you can look in for that. But that's another example. Again, like I said, the way I enter, waiting for the retrace. So if that candlestick went here, I would have entered, but you don't get as many trades, but your accuracy does tend to be high, and you can keep a tight stop. So that's just what I prefer. And again, if you're looking at the 1 day 1 minute chart, you probably would have had an entry for all of them, because you probably would have been able to enter on this, and actually we will check. So if we clear this, so let's see, yeah, if we would have got an entry. So here you got your pennant, and yep, if you were looking on the 1 day 1 minute, you would have actually got an entry, because you can see, draw, draw, pole, A, B, you don't name that anything, but you wait for it, you wait for this, which is C, you got your breakout, not a massive one, but again, this would be my entry here, with a stop loss of most likely this one here, because then it's very tight, but it does allow a few minor supports to go through, and I would have got in here, and you can see we made a nice movement. And even this, you can see, this is why it's so efficient. Let me make this even bigger. We only need this area here. So if our stop is roughly, let's say 418, and we're entering at 422, we got a 4-cent stop loss. That's barely anything, but our potential upside, I mean, you can go for a 2 for 1. I mean, that went up 15 cents. Risk to reward, that's great. And you could even go through like a 5 or 6 losing streak in this strategy, and it wouldn't even affect you, because it's just, you can have such a tight stop depending on your entry, obviously. And that's one other benefit of I like trading the retrace, is you then don't have to sit in the trade. Because if you're someone who gets in, let's say at like this area, and then you have your stop there, you have to wait in this trade for a relatively long time. If you look around here, we're at 238 or so, I mean 1238, and here we're around 2, so you would have had to be in this trade for about 1.5 hours just to see what's happening, whether you get stopped out or you take profit. That's why I personally prefer getting in the retrace, but each of their own. Test it all out, see what you like. I hope this helps. If you got any questions, let me know. I'll answer any on the comments. And if you need to go for any more detail, let me know. I'll definitely help out. If that did help you though, definitely drop a like and subscribe. And I'll be back tomorrow Monday with a recap on all the trades I've taken. And that's it. Peace.